Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report with Alpari. So we do have a Friday, first Friday of the month, and first Friday of the month is non-farm payrolls, and that is why market is a bit muted today. Everybody's waiting for this number. In the meantime, we are focusing on the handshake between Donald Trump and Vladimir Putin. So as you can see, the market is not very busy at the moment if they talk about maybe not a simple handshake, but the handshake. But still, if it's the topic number one on many even if investment portals, it means it's not the day is not very busy. So as you can see on the calendar, we are waiting for non-farm payrolls, which will be shown in half an hour. We'll watch this live. We'll watch the reaction for non-farm payrolls live. It will be definitely interesting to see what will be the number and what will be the price reaction on this number. From the technical point of view, if there was no non-farm payrolls today, I would say that the situation is bearish on American dollar. So from the technical point of view, in my opinion, American dollar should be weaker. This is my short-term, mid-term view, and I hope that technical analysis will go along with the fundamentals, and we will see a drop on dollar index, a rise in cable, for example, or on euro dollar. I will show that in a second. Even as you can see here on the calendar, we do have Trump and Putin meeting marked as an important event. Non-farm payrolls, obviously. Labor force participation rate, also a number that everybody's looking at. Also, what do we have as data for Canadian dollar? So American dollar to Canadian dollar will be definitely a pair to watch. And that's it. Over the weekend we'll have a continuation of the meeting of G20 countries, the most developed economies in the world. And as it is Friday, let me show you the next week, what we should expect next week, what's gonna happen. Will it be a busy week or no? On Monday, I think the data from China will give the tone for the trading on Monday, and also the outcome of the Trump and Putin meeting, and maybe the outcome of the G20 meeting. On Tuesday, we don't have any interesting news. On Wednesday, data from Canada, rate decision. So obviously an influential event. On Thursday, we'll have Janet Yellen speaking, and a pack of data from China, and on Friday, CPIs from United States. So as you can see, next week won't be busy as well. I think those 2 weeks, so this one and the next one, are comparable, obviously excluding non-farm payrolls, because it's the data that everybody's waiting for, and you cannot compare it to anything else. So we can start with the technical analysis now, because again, from the technical point of view, not much happened. Yesterday we got a nice decline on the value of American dollar, but today we do have a correction. But I would like to show you the daily change. As you can see, 20 points. And yesterday we got 50 daily change. The same goes, for example, with euro dollar. Well, now euro dollar is going down. So actually, today American dollar is getting stronger, but I will explain you that in a greater detail. I'm gonna start with this dollar index. So you can see that we got this bullish correction, which was triggered, which started with an inverse head and shoulder formation, left shoulder, head and right shoulder. We got a breakout of the neckline. The price was advancing higher. That was a beautiful wedge. Yesterday we got a breakout of the lower line of the wedge, and the price went to test the horizontal support here on 96 point, let's say 0.05. The support got beaten without a question. Actually, the price went significantly lower, and the price started to make lower lows and lower highs, which is just an invitation for a new leg down, right? We broke this support that triggered, that opened away. We broke this support, which triggered a sell signal, and now we're just having a typical movement for the price action traders. So a broken support is tested to the closest resistance, right? It happens very often. Nobody should be surprised with that. And if there was no data today, if we wouldn't have non-farm payrolls today, I wouldn't hesitate with opening short position here, because it's this is a good occasion, right? So broken support is tested now as a resistance. There is a formation, there is a trend, there is a horizontal resistance. So everything is pointing that the price should decline, apart from the fact that in 23 minutes we'll have a data which can totally change it. I'm not, well, I don't want to say crazy, but I'm not I'm not this kind of a trader to open a position on American dollar 20 minutes before the non-farm payrolls. I used to have a strategy, especially for payrolls and for other important macro data. It was a strategy for breakout. So before the decision, I was opening pending orders for breakouts, so sell stop, buy stop. And a few seconds before the decision, before the data was released, I moved that orders as close as possible to the actual price. Obviously, for those orders to be triggered by a proper movement, not by accident, by, for example, bigger spread. So it's a strategy for advanced traders. You need to feel the market. You need to know how the market moves during the macro events. But I had this strategy and I used that on every payrolls, and it was giving profits. I would say that, I don't know, out of 10 payrolls, only once we got the wrong direction, so the order was triggered and the price moved the other way. Also, the key for that is diversification, so you don't put all eggs into one basket, but you diversificate, right? You open small orders on gold, on euro dollar, on cable, for example. But I did that with my friends, so we did that together. You need sometimes you need 4 hands to handle this, but yeah, that were good times. Now I'm calm. I try to avoid any emotions during trading, so that is why I'm skipping sessions when there is no fun payrolls, especially that I check my strategy, and my strategy on Fridays has the worst results. So there's no point for me to struggle to force myself to trade on Fridays if I just cannot do that, right? I'm not afraid to use that word, that I cannot trade on Fridays. My strategy is not suitable for Fridays. So if you can make it a day off from trading and still get great results, I think it's even better not to trade on Fridays. Fridays should be for something else. All right, that is dollar index and my view on that is a bearish view, but obviously we have to wait for the payrolls. Cable, I'm enjoying cable, I'm enjoying the situation on cable. Why is that? Maybe let me start with H4 chart. Upswing, wedge, or a flag, it does not really matter. So we do have two trend continuation patterns, and now because of the worst data from UK industrial and manufacturing production, the price on the cable is going down sharply, but it's still in a trend continuation pattern. So from the technical point of view, what I would love to see here is price getting to this rectangle here. Why here? Because here we do have a upper line of the recent wedge. We do have a lower line of the current wedge, and we do have 38.2 Fibonacci level, which is almost always respected. So we do have a combination of three important supports in one place. I would love to see the price getting there, creating inverse head and shoulder formation, or a hammer, or a bullish engulfing, and that would be a great place to open long position with a very interesting risk to reward ratio. American dollar to Mexican peso is next instrument, which I am seeing a nice trading opportunity here. So again, there was an uptrend till here. The long-term uptrend line, as you can see, got broken. Then the horizontal support got broken, labeled with this blue color. We tested this once, also a midterm downtrend line, so that was a strong sell signal, and we traded that on our live account. Then the price went significantly lower, but then the price created a double bottom formation. Here, double bottom formation, we can say that it's a neckline of the double bottom formation. Or here, but if it's here, it's worse for the buyers, because it means that the line got, that was a false breakout. So let's say it's here, right? Because usually after the breakout, sideways trends are not present. Usually sideways trends are present below the resistance or above the support, because they indicate the willingness for a breakout. Okay, so let's have it like that. It's not so important, but it's another point for sellers. So we had this double bottom formation. The price broke this resistance here, but failed to close above the horizontal resistance, and now they are going lower. On a daily chart, we do have from 2 days ago, we do have a candle with long head. From yesterday, we got a shooting star, a small body, and a long head, and now we're having a shooting star as well. So we are having those bearish candles below the resistance, which is a sell signal. This is a technical sell signal. It looks really nice. Next one, euro to American dollar. I was hoping for the price to get there, you know, to touch the trend line, horizontal support, and a correction equality pattern, but they created this flag and an inverse head and shoulder formation, left shoulder head and right shoulder. They broke the upper line of the flag yesterday, the neckline, and they went significantly higher. And they came back above the neckline of the head and shoulder formation here, left shoulder, head, right shoulder. That's a horizontal support. Well, and currently that will be the closest support here. I don't think this correction equality pattern will happen again. Okay, it looks like that. This head and shoulder we can remove. Yep, so we do have a first potential support, and we do have a second potential support here. We'll see where or if the price going to stop, obviously influenced by non-farm payrolls in 15 minutes. Australian dollar to American dollar made a new lows. not today, they missed a little bit. Buyers can hope for double bottom formation, resistance here. It also will be influenced by non-farm payrolls, obviously, because it's with an American dollar. This pair was interesting here when they were close to the resistance, when they were bouncing from the resistance, and we talked about that at that time. Now it's not so interesting because we are in the middle between horizontal resistance and horizontal support. I don't like to trade these situations because for me you should be as close as possible to the support or as close as possible to the resistance to trade it. Because of the risk to reward ratio, which you want to have the best possible. Next one is gold. That's a funny story on gold. Well, more fun we had on silver, but still it's kind of a Batman pattern here. Inverse head and shoulder formation, left shoulder, head and right shoulder. Where's the neckline here? Or I would say here. We should see for a buy signal, we should see price getting there. As long as the price is below, there is no buy signal whatsoever. There is just a defense. That's another resistance here. Let me just change the color. Well, the big picture is that we're having a sell signal on gold, but I'm just trying to highlight a place where we can think about going long. We are above a horizontal support here. The situation is not good. That does not look good. Only hope for the buyers is that they will create the right shoulder here of the inverse head and shoulder formation. But in the same time, it can be rectangle, right? Instead of the inverse head and shoulder formation, we can think about rectangle, and rectangle is a trend continuation pattern, right? And also this kind of a sideways trend above the support is a bad sign. As you could see here, that's kind of similar. So this left shoulder with this head, right shoulder, they try to do that, right shoulder here, and then breakout. So maybe we'll have a breakout as well. So it wouldn't be a bad idea to wait here with a sell stop order. Obviously, I'm not gonna do that because it's too risky now. American, let me show you the silver. Where I said funny, because silver had a flash crash overnight during the Asian session here, very long tail. This movement was fueled there, was stop loss orders of all the buyers here, many stop loss orders here were triggered, and a stop loss order for a long position is a short position, so that is why we get a further decline. It does not look good, but flash crashes happen. So you can see flash crash, and then we went back again. So silver for now stopped being an interesting asset for me because the chart is destroyed. American dollar to Polish zloty still putting pressure on this horizontal support. Breakout is very probable. It is always possible, but this time it's getting probable. So as well, sell stop order here would be in case of a bearish breakout, that can be a nice idea here. And this is American dollar to Japanese yen. We're here close to all-time, not all-time, but long-term highs. Everything is great. All supports are respecting, the price is advancing higher, and there is just a nice party going on American dollar to Japanese yen. And non-farm payrolls in 10 minutes. This is euro to British pound. From yesterday I removed a few lines, few supports and resistances because the technical situation changed. What I'm seeing here right now is an ascending triangle formation. Ascending triangle formation is a trend continuation pattern, is a bullish pattern, is a trend continuation pattern. So maybe we'll have a bounce from this, but then the price should bounce from this area, and then we should have a breakout, or we can have a breakout right now. Especially that the long-term situation here after we broke this line is kind of positive, right? So we do have a positive sentiment on euro to British pound. It looks good. Euro to Japanese yen. Also, euro is strong, Japanese yen is weak. That is why there is no surprise that we are heading to this long-term resistance. But obviously, it's this kind of resistances in the uptrend. Let's say it's a channel up formation, right? So this kind of resistances in the uptrends, they are not very strong. It's not like people gonna gather here and start to sell. No, it's not this kind of resistance. So yeah, its sentiment is very positive. American dollar to Japanese yen. They broke this resistance. Local one. They broke this resistance, and now the price is aiming this one. From the technical point of view, we should get there. This trade is not very good in terms of the risk to reward ratio, unfortunately, because if you would buy here, you would have to place stop loss somewhere here. So actually the potential profit, which is here 50 pips, is less than the potential loss which you should take, because there's no point placing stop loss here or here or here, because you don't have any important supports here. You have an important support labeled with this yellow color. So when you open here, stop loss here 86 and potential gain 40. So the potential risk is twice as big as potential profit. So never open this kind of trades, even if technically it looks good. New Zealand dollar to Japanese yen, as expected, price is going higher, and soon we're gonna touch the neckline of the inverse head and shoulder formation here. British pound to Japanese yen is having a correction after they reach the horizontal resistance. Here on the daily chart, we can see that the price is trying to form a shooting star, which can be an invitation for a correction. And American dollar to Canadian dollar, this instrument will be influenced today very much, because we don't have only data for the American dollar but also for the Canadian dollar. So we could see that this blue area is a very important support. Now currently for the last few days this support fails to bring a retracement. But it's starting to get promising. Why is that? Because of the left shoulder head and the right shoulder formation, so an inverse head and shoulder formation, which technically suggests that the price should advance higher after this one. Quickly, before the non-farm payrolls data, which will be published in the next 5 minutes, let me show you oil and indexes. So oil on hourly chart, as you can see, 2 days ago downswing, then yesterday a breakout of the lower line supporting the correction, and now new lows. So the price is making lower highs and lower lows. It's back in a downtrend. We have a downtrend bullish correction which went exactly to 50% Fibonacci level, and now we do have a continuation of a downswing. Every technical factor here is telling us that the price should decline. S&P 500 is close to an important support here, so a combination of uptrend line and this horizontal area here. The first one, mid-term, short-term, got broken, so we can go lower. And yes, this is actually the place for a potential bounce, as you can see from the historical movements, resistance, resistance, support. But this price action here, which we are having right now, is not encouraging for opening long positions. Simple as that. I don't see a bullish power here, so that is why I'm staying outside. But obviously it's caused by traders anticipating non-farm payrolls. And the next index is DAX, which is defending absolutely crucial in the long-term support. It does not look good again. So one bottom yesterday, they tried to pull defense here and they created a bottom, but now we can see that there's a big selling pressure, and it's very probable that the price will advance lower here. If the support will be broken, that can be very dangerous for the traders. Right, it's 3 minutes, so let me change the accounts again, and we will adjust, I would say, few charts. American dollar to Canadian dollar. I would say that I would love to see DAX, not DAX, dollar index, obviously euro dollar here, and also gold. Okay. Different time frames, M15. Euro dollar hourly is K, dollar index, and American dollar to Canadian dollar. I guess we see everything. So on the right we're having American dollar to Canadian dollar. On the left top we're having a dollar index. Middle we have a euro dollar, and on the bottom left we do have gold. As you can see, dollar is getting stronger right now. Nice reaction, nice movement on gold. But obviously before the non-farm payrolls, the liquidity on the market is really low. We're having 30 seconds to the data. For the traders that haven't experienced that yet, you'll see a nice reaction, hopefully. I don't advise you to trade. I don't advise you to be on the market right now, because it can get crazy. So in 10 seconds we now dollar is a bit weaker. 3, 2, 1, data, movement. American dollar is stronger, so probably gold is support on the gold is under heavy pressure. Interesting. American dollar, Canadian dollar. is stronger, so maybe better a number from Canada, and most probably a very good number from Canada. Let's wait for the data. I soon should have that. But from Canada, most probably better than expected. As you can see on euro dollar, that was interesting. First down, then up. Okay, non-farm payrolls, 222,000. Estimated was 178, so much better number. Interesting. That was the initial reaction, that the data was better. That's how algorithmic trading expert advisors work. They read the number and they just trade the number. So if the number was better, those algos were buying dollar. But now we can see, for example, euro is heading higher than dollar. Definitely data from Canada better, because we have a nice downswing here. Gold is trying to defend the horizontal support. See, it's how it is, guys. Euro dollar just on this made 47 pips, and for the whole day they made like 20 pips. Still, 50 pips, it's not a lot. These were not those non-farm payrolls that drove the markets in the recent history. We got many times much stronger reaction, but it's good for a start, right? If you're just starting with the market, it's good for a start. Thank you guys very much. You saw the non-farm payrolls. In theory, it goes with the technical analysis. Let me just check the American dollar to Mexican peso. Yes, we are saying about a short position here. British pound to American dollar buy. So it goes along with the technical analysis, which is always fine. Thank you guys for watching daily analytical report. For more trading information and occasions, visit our Twitter account and our website alpari.news.